Share prices across the lithium sector have been collapsing over this past week. You might be wondering, what has been the driver of this? And then what does it mean for the sector more broadly moving forward? In today's video, we're going to unpack all of these key drivers. We're going to dive into the explosive Goldman Sachs report about the battery metal space that really led to a lot of fear and uncertainty for lithium, as well as some of these other resources. And we'll also talk about some of the price impacts on some of these leading ASX Lithium names. It's been a whirlwind past week, it's got a lot of questions and uncertainties, and today we'll be unpacking it all.
Sit back and enjoy.
And so for a bit of that contextual backdrop, as we're all familiar with, the lithium sector and the lithium prices more broadly over this past period have been on a phenomenal run. If we think back just 12 to 18 months ago, nobody would have anticipated where these prices have got to. There's a significant amount of excitement behind the sector and for the broader decarbonisation and electrification trends. But of course, there's been a lot of questions about have things got ahead of themselves and when will these prices potentially peak? That's led to a lot of the discussions over this past period. First and foremost, one of those fundamental drivers was a Goldman Sachs report that came out about the broader EV battery metal space. Lithium was, of course, highlighted in that, but it included nickel and copper, cobalt discussion too. And in this video later on, we're going to really dive into this report and what it spoke about. But there are a couple of other drivers as well. In Argentina as well, there was news that the Argentinian Customs Agency has had a benchmark reference price of US $53 per kilogram for lithium carbonate exports. This was implemented to prevent under-invoicing and improve transparency for the sector. In isolation, this news probably wouldn't have changed things too much, but of course, with the big week that we've just had, it did have a lot of eyes on it. And then not only isolated to lithium, but demand from China with the lockdowns has led to a lot of uncertainties for a range of different commodities. The battery metals, they have not been immune to that, but lithium definitely has been affected by this too. And so what were the results? As we go through it in this next section, we're going to look at some of the implications and results from some of these leading ASX Lithium names. And then of course, we'll talk about the Goldman Sachs report and what it could all mean. So first of all, Pilbara Minerals. ASX PLS has really served as a bellwether for the rest of the broader EV material space. We can see on the day of the sell-off, minus 22%. So they lost nearly a quarter of their market cap in a single session. Year to date, Pilbara is now down by over a third of their total value. They were a leading light in 2021, but you can see the effect of that on Pilbara. They were trading around that 10 billion market cap level and back below that $7 billion mark now. Allkem's another one in a similar type of space. ASX AKE, of course, came together with the merger of Orocobre and Galaxy. You can see here with the sell-off, they were peaking just around their all-time highs as well, and they lost over 15% of their value in a single session. So you can see here, these are not penny stocks. These are significant leading global names. These are blue chip companies that are losing a significant amount, multi-billion dollars worth of value in a single session. Liontown Resources, another one there that's they had some exciting news with Tesla, or they had news surrounding their offtake with Tesla over this past period, but they also sold off as well. This is another company over $2 to $3 billion worth of market cap before the sell-off, and they lost 15% worth on the day. So there was significant effects across the sector. It was not only with single names, it was not only one type of the cohort, it wasn't only producers or developers or explorers. There was a lot of uncertainty across that broader EV battery space. And that comes to the report itself. As we can see here, this is the report from Goldman Sachs. So it surrounds the broader battery metal space. It's not only isolated to lithium, but you can see here just from the headline title what it has to say. And it's quite clear there. The battery metals bull market has peaked is what it states. And it's worth noting that it's not saying that the battery bull market is over. It's stating that this phase of the cycle is over, and it will explain why throughout. So we can see here, with climate change top of mind, investors are fully aware that the battery metals will play a crucial role in the global economy. I think everybody is aware of that, and we've talked about it at length on the channel. Yet despite this exponential demand profile, they assess that the battery metals bull market's over for now. And some of the reasons behind this, as we look further down, is that rather than a lack of investment or a lack of capex, which I've seen in other areas, the reverse has occurred with a surge in investor capital into supply investment tied to the long-term EV demand story. And this is a really interesting discussion point. Essentially trading a spot-driven commodity, which it should be inherently. They believe that lithium and the broader EV battery material space has started trading as a forward-looking equity, pricing in a lot of forward future excitement. And that fundamental mispricing has in turn generated an outsized supply response, because obviously we know that everything on the markets is supply and demand. As demand continues, if demand stays equal but supply increases, well then of course that means that prices are going to come down. As we know, demand's not going to stay equal, things are going to change over time. But as an outsized supply response starts to come online, well then that has the effect of lowering prices. And obviously as prices rise, then it's going to lead to higher supply responses coming online, because there's more incentive for potential producers to bring projects online, and more economical cases start to stack up. And so that's what they're stating here, is that the fundamental mispricing has generated an outsized supply response. And I'm sure you've seen that across the board. There's many developers and explorers and companies trying to move into production to be beneficiaries and ride on the tailwind of the currently elevated lithium prices. This next section is quite fascinating too. They say the price is on a downward trajectory over the course of the next 2 years, so out to 2024, with a sharp correction in lithium. So spot 60,000 at the moment. They are anticipating that in 2023, over the next 12 to 18 months, that the price of lithium can get down to $16,000, which is really, really significant. It's one of the most bearish calls that I personally have read in the space. They also state to a lesser extent cobalt, and they believe that nickel's price profile will be flatter as a result of that, with actually a rally into the back end of the year. And then here's getting into kind of the meat of the discussion. So a head start on the super cycle. They're not stating that, there's no demand for it. They're stating that there is clear ESG benefits, clear battery demand prospects, but these help to trigger the start of a supply capex surge from the late 2010s. We saw the boom bust cycle initially in the 17-18. For those who were watching the lithium space back then, we saw the boom, then the bust, then obviously back end of 2020, we started to get that price signal into 2021. So it's been quite a rapid uplift and ascent from there. And so this next part's fascinating. As a result, over 2022 to 2025, so the next three or so years, they expect lithium supply to grow on average by 33%. And this next part, it's worth noting, against annual demand growth rates of 27%. So what they're stating here is that they believe that lithium supply will come online and outstrip demand from 2022 to 2025. So 33 to 27%. They expect Chinese lithium project expansions to multiply rapidly, in particular integrated hard rock projects. And there was some news about BYD as well over the past week, just as well as spodumene supply outside of the region continues to strengthen too. There's some further discussion about nickel and cobalt. We're not going to go through all of it, but if you are interested, this was a very interesting report that gives you a bit of context across the broader space. So it is worth looking into in your own time. They've stated here the supply dynamics offer relative value. They're placing a bit of context. There's still value in the battery metals complex. They believe the best indication of relative value in the battery metals complex comes from the differentiating supply risks of the commodities. And then they provide that insight that for them, their call is that in a fixed demand environment, so all things being equal, favoring cobalt with its more constrained supply path over lithium and nickel offers protection from the prospect of accelerated demand via policy, downside surprises to supply projections. Here they've got some really, really interesting discussions. Obviously, strong demand in the sector. I think everybody's familiar with that. Battery demand, 440% by 2030. Energy storage has to increase as well, 50% of emissions. Lots of more commodity-specific discussion here from lithium, cobalt, and nickel. And then here is where they've got the deficit and surplus discussion. So they believe lithium, slight surplus in 2022, 2023, lithium in surplus, which obviously speaks to the supply outstripping demand over that period. But they do state that by 2030, as demand continues to ramp up rapidly, even though supply will come online, they believe that we'll be having a deficit across these commodities. The end of the beginning. So these are a few of their different factors I've considered. Softer fundamental phase ahead of for the battery metals. This is essentially just discussing the fundamentals of the supply-demand dynamic. We can see here the price signal that they've got, and then the supply balance for all three of the commodities. They are stating that the policy support overpowers cyclical headwinds to battery demand. So there's strong policy support. We know that there's coordinated support both from a fiscal level, but also from corporate investment. And we're seeing that across the board coming in. And so they've really just affirmed that. And we can see here global battery demand set to rise tenfold over this decade. So it's massive demand, not just for electric vehicles, but energy storage systems as well, which will become a bigger role to play. Battery chemistry is key to demand, but is a slow-moving change. If you are interested in the NCM/NCA versus your LFP discussion, some really interesting insights there, and they've modelled a few different scenarios out for this as well. And then supply surge across the battery metals complex. And I did think it was just worth adding that, like anything on the markets, there are going to be some sides that are extremely bullish and some sides that are extremely bearish. But it's always worth taking in a range of different inputs, reading different pieces of information, and then bringing that together and forming our own opinions on that. If you did search far and wide, you'd find many reports that are much more bullish than this about the future of the electrification trend and EV adoption. Well, of course, if you search far and wide, you can find others that are far more bearish even than these forecasts themselves. But that's what makes a market. There's buyers, there's sellers, and everyone in between. I'd love to know your thoughts on it all, so drop in a comment below. Let us know what your thoughts are on the EV demand and the lithium and broader EV battery material space moving forward. And if this is your first time on the second channel, welcome. This is the new second channel, so make sure you've subscribed and turn your bell notifications on as well. We'd love to have you join us. And so bringing it all back together, what does it all mean? Well, like anything in the commodity space, it's a question of supply and demand. I don't think anybody's debating the demand of electric vehicles and, of course, the battery metals that will go into those lithium-ion batteries. So the demand for lithium and these other resources are going to stay strong for the foreseeable future. But on the other side, it's a question of supply. First and foremost, will supply come online in time with schedules and at the required volumes? Of course, it's not easy to bring these projects online. There's often delays or cancellations or other roadblocks that have to be navigated through. Of course, we do know, however, that high prices drive a supply response. We evidently have high prices now, which, of course, as the supply response starts to come online, will in turn lower prices. As the quote goes, the cure for high prices is high prices. So the question is, at what speed will the supply response come online? And then ultimately, at what stage will the supply and demand dynamic start to balance itself out? It is worth noting as well that there's really significant divergent opinions across the sector. Yes, that note came out from Goldman Sachs. There was another note as well from Credit Suisse with a similar type of lens previously, but there's a range of different divergent opinions with some extremely bullish as well in the sector. And so it's a matter of balancing it all out and then making up your own opinion. I think it's also worth noting and discussing as well that share prices in the lithium sector are not the underlying lithium commodity prices or the lithium market. And on the same token, the lithium market and the lithium prices are not a direct one-for-one correlation with share prices in the sector. We've got to understand that they move on different dynamics. Yes, they are correlated, but they move on different dynamics. And so ultimately, there are fundamental tailwinds behind the sector. Over the long run, everybody can see that. But it's going to be very interesting to see what's up ahead in the near term and where this supply and demand imbalance starts to land. Thank you for joining us. Here's some other videos you can check out in the EV battery material space. Let us know your thoughts with a comment. And for now, stay well and happy investing.